So welcome to my next video. This is the second video, by the way, and we're gonna talk about tax remedies. So let's define first tax remedies. So there are two types of tax remedies that we're gonna talk about. The first one is the government tax remedies. What are these? These are the actions allowed by law to implement the tax laws or enforce collection. We already know that taxes are necessary in order for the government to function and the state to survive. So it's understandable that the government should exert effort to enforce tax collection. However, the government should respect the due process of the law. The next is the taxpayer tax remedies. What are these? These are legal actions which a taxpayer can avail to seek relief from possible excesses by revenue officers or oppressive effect or undue burden of tax laws. So, we as taxpayers are not required to always agree with what is the assessment or findings of the government. Sometimes we have doubts that maybe the actions or assessment of the government is already excessive, so that's why we need to have actions in order to refute these findings and the actions. So, in this particular lecture, our main objective is to know the due process of a tax audit. So, before we go through the processes or the due process of a tax audit, let's talk about the illustrative problem. As an owner of Sana Oil Company, you have filed an annual income tax return for the year ended December 2019 on April 1, 2020. So what is this annual income tax return? It's just a document that contains the items in order for you to get the tax due. So the taxable income is there and the tax due is there, as well as the items deducted and the items considered. So the taxes paid by the company totaled 500,000 for the year. The deadline for submission of annual income tax return is April 15, 2020. So that means that the Sana Oil Company is not late in filing the income tax return, as well as the taxes paid by the company is 500,000 for the taxable year 2019. On April 1, 2021, the Bureau of Internal Revenue wanted to examine the tax returns that the company filed last April 1, 2020. The question is, can they do that? And the answer is yes. The reason is found on the prescriptive periods. Let's say, for example, if the return filed is not fraudulent, then 3 years from the actual filing of the return or deadline of filing, whichever is later, the BIR can assess the tax return. But if the return is fraudulent or if no return is filed, then we have 10 years from the discovery. So if we're going to apply this in the illustrative problem, the date lines are: first, we have 12/31/2019, which is the end of the taxable year, followed by the filing date, which is 4/1/2020, and the deadline of filing, which is 4/15/2020. The date that the BIR wants to examine is on 4/1/2021. So let's assume that the return filed is not fraudulent. So we're going to use the 3 years from actual filing of the return or deadline of filing, whichever is later. And as you can see, the deadline of filing is actually later than the filing date. So we need to count from 4/15/2020, 3 years. So first year is 4/15/2021 and then 4/15/2022. and then 4/15/2023. So the BIR can have its final demand letter up to 4/15/2023 for the income tax return filed. So again, on the date of examination that the BIR wants 4/1/2021, can they do that? Yes, because it's still within 3 years. Since we have already established that the BIR can investigate, can do a tax assessment based on the prescriptive period, let's start the discussion on the process of tax assessment. So the very first thing that will happen is the receipt of letter of authority from the BIR. What is this letter? It is a letter which will be served to the taxpayer or its authorized representative to inform that the taxpayer will be assessed. So most of the taxpayers are afraid of receiving this law, but if you are confident that you have filed for a tax return before the deadline and you have paid for the right amount of taxes and you know the due process and you know the important contents of the letter or communication that they are going to serve as well as the process of serving, then there's no need to be worried. So let's elaborate first on this sentence. So the letter shall be served to the taxpayer or his or her authorized representative. So that means the LOA shall not be served to the neighbor or to the security guard of the company because it will make the assessment void as a violation of the due process. So what are the important contents of the letter? So in the letter, you will see the signature of the regional director of the BIR or the commissioner who authorized a certain revenue examiner to inspect the books of the taxpayer. Actually, it is called a letter of authority since it just authorizes some revenue officer to inspect the books of the taxpayer. The question is, when are you going to see the signature of the regional director? And when will you see the signature of the commissioner? It depends upon your company. So, for example, if your company is the Taganito Mining Corporation, which is registered as one of the large taxpayers in the country, then you will see the signature of the commissioner because that is under the jurisdiction of the national level. But if your company is a small company as well as you are a small taxpayer, then you are going to see the signature of the regional director. Next, content of the letter is the name of the authorized revenue examiner. So you will see the specific name of the revenue officer that will inspect your books. Now, let's go back to the proper serving of the LOA. The LOA, aside from serving it to the taxpayer and the authorized representative of the taxpayer, it shall be served by the specific authorized revenue examiner. So in practice, if you are going to be served with LOA, ask for the identification card of the one serving the LOA and compare it with the authorized revenue officer in the LOA because they should match. In the letter, you can also see the date of issuance. The date the letter of authority has been drafted by the regional director's office or the commissioner. So this is very important because you're going to compare the date of issuance and the date of serving. The difference of the date of issuance and the date of serving shall be 30 days or within 30 days. It should not exceed. Otherwise, the LOA is invalid. You are also going to see as an attachment of the letter of authority the checklist of records that will be required by the BIR because they cannot examine anything if you are not going to submit your records. These records are required to be submitted in 10 days. However, most of the companies, especially if they have a lot of transactions, they cannot submit it in 10 days. So don't worry. Because in the case that you fail to submit, the BIR will issue a notice to demand the records and you will be given another 10 days. That's the first notice. And if you fail again, don't worry again, because they will send you another, the second and the final notice, and you'll be given an extension again of 10 days. And if within 10 days after the receipt of the final notice, you didn't submit the required records, then subpoena juris tecum will follow. This subpoena juris tecum will follow. This subpoena is not a warrant of arrest. This is just a legal demand for the records to be submitted. However, if you are not going to respect the subpoena juris tecum, then there is a big risk, there's a big chance that you will have to face a criminal case against you, because that is punishable by law. So, this is the question. Is this always the first step, the receipt of letter of authority? Yes. Because if there is no letter of authority, there will be no valid assessment or tax audit. So sometimes the letter of authority is being confused with the letter of notice. So what is this letter of notice? The letter of notice is just a mere notice that the taxpayer has a discrepancy in their tax payment. It is not a substitute for the letter of authority. So meaning, you cannot, or the BIR cannot start their assessment starting with the letter of notice and then they're going to investigate. It should always be the letter of authority, and that is according to the law. So we are still on the process of tax assessment. Step 2 is the tax investigation commences. So this happens after you have submitted all the documents in which they are going to examine. So if you are not confident enough, you should hire some experts or practitioners or professionals like certified public accountants or tax lawyers to help you just in case. But if you're confident that you did nothing wrong, then you just have to wait for the conclusion of their investigation. After the investigation and before they communicate their audit findings through preliminary assessment notice, the BIR might send a notice of informal conference which invites the taxpayer to present their audit findings and for the taxpayer to explain if ever. The informal conference should happen after 30 days from the receipt of the notice of informal conference. Attending is not mandated. So, after the tax investigation is completed, the BIR will issue a document known as the preliminary assessment notice. This is just a communication by the Regional Assessment Division or the Commissioner of the findings of the Revenue Officer in charge. So, the results of findings is in here that will show facts and computations and also the legal basis on which their assessment is based. Otherwise, their assessment is void. So is this the end for the taxpayer? No, because the taxpayer will be given 15 days after the receipt of the preliminary assessment notice to reply if ever the taxpayer wants to contest the findings in the preliminary assessment notice. So, if the reply of the taxpayer is honored or accepted, then there will be no next step. However, if it is not accepted, then we go to number 4, which is the issuance of the final assessment notice or final demand letter of the BIR. In here, the details and the format is similar to the preliminary assessment notice, although this is already the final demand letter. So is this the end of the road for the taxpayer? Again, this is not. Because if you do not agree with the details in the final assessment notice, you can still file a protest letter to the Commissioner on Internal Revenue or his authorized representative within 30 days from the date of the receipt of fund. So there are two types of protests that you can file to the CIR. The first is request for reconsideration. It is simply a plea for evaluation of the assessment without the need for submission of additional evidence. So that's request for reconsideration. And we have request for investigation. It is a plea for re-evaluation also of the assessment. However, additional evidence will be submitted by the taxpayer. And that additional evidence should be submitted within 60 days after filing the protest. The next stage is if your protest has been denied by the CIR. So you have the option to file an appeal with the Court of Tax Appeals if you're sure that you did nothing wrong. This happens if the CIR denied the protest either directly by writing you a letter or indirectly by not acting on the protest for 180 days from the date of the protest submission. So the filing of the appeal must be made within 30 days from the denial of the protest. If the appeal worked, then there will be no next step. However, if the appeal didn't work, then step 7 will follow. You're going to file for motion for reconsideration in the Court of Tax Appeals. And the filing of motion for reconsideration should be done within 15 days from the date of the denial of the appeal. If this doesn't work, then you need to file an appeal with the CTA in bank. The Court of Tax Appeals in bank is different from the Court of Tax Appeals mentioned in number 6 and number 7, because number 6 and number 7 there is only one judge involved. In here in the CTA in bank, just imagine there are panel of judges in here, so you're making an appeal to the panel of judges of the CTA. The filing for appeal should be done within 15 days from the date of denial of the CTA's motion for reconsideration. If this doesn't work, then you go to number 9. You file for the motion for reconsideration in the CTA in bank within 15 days after the denial of the appeal on the CTA in bank. Then if this doesn't work again, you go to number 10. You file an appeal to the Supreme Court already within 15 days after the CTA in bank's denial of the motion for reconsideration or MR. Then, if you still failed, you file a motion for reconsideration to the Supreme Court within 15 days after the denial of the appeal to the Supreme Court. And you still failed, you can file an appeal to the Supreme Court in bank within 15 days after the Supreme Court's denial of the motion for reconsideration. And lastly, if that doesn't work, filing for motion for reconsideration in the SC and bank within 15 days after the denial of the appeal on the SC and bank is the last resort for the taxpayer. So, that is the end of the taxpayers' remedies. There are a lot of remedies for the taxpayer which is not mentioned in here. Like for example, before the tax audit or the tax assessment, the taxpayer could have used tax minimization schemes or tax avoidance schemes because they are legally acceptable. Or else, if the taxpayer thinks that the return filed, there is something wrong with the return filed, they could have amended the return. Because according to the tax code, the return filed can still be amended within 3 years after the return is filed. However, if the BIR has already issued a letter of authority, then the 3 years in which you can amend your return will be cancelled or will be stopped because of the letter of authority. So that's it for the taxpayers remedies. So this is the end of the part 1. Please wait for the part 2 of this video that is centered on the government remedies as well as the computation of the tax due plus the penalties. And feel free to play and replay this video until you master the topic. Thank you.